Why accounting and finance important for non-financial professional? Understanding accounting concepts is no longer the domain of accountants. Following the failure of some major corporations, chief executive officers of the company and other high-level executives have been asked to take responsibility for the financial statements of their companies. Management can no longer separate itself from accounting issues, and they now have to gain an understanding of accounting concepts. Finance is a lifeline for organizations. Individuals with a background in finance have been considered to be extremely efficient at managing the day-to-day financial operations of any organization. Benefits of acquiring accounting and financial knowledge for non-finance executives are: analyzing financial statements, understanding costs and methods to reduce the costs, taking decisions regarding the price of the products or services or both, deciding the best product mix and opting for a viable option to meet the need, in communicating more effectively with key sources of financing, such as bankers, lenders, and investors of their organizations, utilizing the core terms, concepts, and techniques of finance and accounting for decision-making. Overview of financial statements. The primary source of communication between a business organization and external parties is in the form of financial statements. There are three primary financial statements: the balance sheet, the income statement, the statement of cash flows. The balance sheet shows the financial position of a business entity as of a given date. Financial position consists of a listing of the assets of the organization, its liabilities and the equity of the owners at a given date. Assets consist of all economic resources owned and controlled by an organization. Liabilities represent claims against these resources. The owner's equity represents the owner's interest in the assets of the organization. The income statement shows the results of operations of a business entity during a period. This statement summarizes the revenues earned and expenses incurred during that period, and the resulting net profit. The statement of cash flows summarizes the cash transactions of a business during a period classified into operating, investing, and financing activities. The first thing in the balance sheet, we should notice that total assets are equal to total liabilities and owner's equity. Total assets as of 31 December 2022 $1,720,454 have to equal total liabilities and owner's equity of $1,720,454. Let us start with current assets. Under current assets, let's start with the most liquid assets. Cash being the most liquid assets, then trade securities, accounts receivable and inventories. Then long-term investment. Under long-term investment comes investment. Now let us move into non-current assets, property, plant and equipment. Under property, plant and equipment, landed costs, building and the accumulated depreciation. Let us move into liabilities and owner's equity, current liabilities. Under current liabilities, notes payable to banks, accounts payable, accrued interest on notes payable, income tax payables, accrued expenses, deposited received from customers. Long-term liabilities. Under long-term liabilities, 12 years, 12% notes, maturing on January 2034. Owner's equity. under owner's equity represent owner's capital and retained earnings. Current assets consist of cash and other assets that are reasonably expected to be converted into cash or sold or consumed within 1 year. An operating cycle is the length of time it takes for the cash to be invested in inventory, inventory to be sold, and the resulting receivable to be collected in cash. Current assets include cash, marketable securities, accounts receivable, inventory and prepaid expenses. Non-current assets consist of long-term investments, property, plant and equipment, intangible assets. Current liabilities are claims against current assets and represent obligations that will be satisfied within 1 year or one operating cycle, whichever is longer. Current liabilities include trade payable, short-term bank loans, and all other short-term obligations. Shareholders' equity represents the owner's claims on the assets of the business. The equity in a single proprietorship is referred to as proprietor's equity or owner's equity. The equity in a partnership is referred to as partner's equity, and the equity of a corporation is referred to as shareholders' equity. The owner's equity consists of two primary items: the original investment of the owners and the earnings retained in the business. The balance sheet equation is assets equal liabilities plus owner's equity. Income statement. In the income statement, we reviewed the performance for the period from 1st January 2022 to 31st December 2022. We were looking at what we did over an entire year or an entire quarter. An income statement is also known as profit and loss accounts or the P&L. It shows whether a company is making a profit or loss for a given period. The income statement, along with the balance sheet and cash flow statement, helps you understand the financial health of your business. An income statement is a summary of a business's revenues and expenses over a period of time. We make a profit when our revenue exceeds our expenses. And on the flip side, we make a loss when our expenses are more than the income we have earned. Let us review this income statement. XYZ Trading Company. Income statement. For the year ended 31st December 2022. Here is the period. The income statement is prepared for when? For the year ended 31st December 2022. Net revenue minus cost of goods sold, then we come up with the gross profit on sales. We deduct operating expenses from gross profit. Operating expenses include selling expenses and administrative. We arrived at income from the operation. We add other revenue and gains to income from operations. Include dividends income and gains on sales of land. Adjust other expenses and losses from the total to arrive at income from continuing operations before taxes. Other expenses and losses include interest expenses and loss on sales of equipment. Deduct income tax from income from continuing operations to arrive at income from continuing operations. The income statement may include 3 lower sections that are somewhat unusual and non-recurring. These are: number 1, the results of discontinued operations. This section reports on the gains and losses of disposing of the identifiable segment of a business. Number 2, extraordinary gains and losses. Extraordinary gains and losses must be both A, unusual given the environment of the business, and B, infrequent in occurrence. Number 3, the effect of changes in accounting principles. Business entities are expected to be consistent in the application of accounting procedures. However, there are occasions when a change in procedures is desirable or may be required by a new accounting standard. The statement of cash flows represents a summary of all cash transactions that occur during the period. These transactions are classified into three groups: cash flows from operating activities, cash flows from investing activities, cash flows from financing activities. This statement of cash flows is prepared using the indirect method. The indirect method starts with the profit before tax and then adjusts this figure for non-cash items, such as depreciation and changes in working capital. Cash is the lifeblood of every business entity. The financial viability and survival prospects of any organization rest on the ability to generate net positive cash flows. Cash flows help to reduce an organization's dependency on external funding, service existing debts and obligations. It gives users of financial statements more information about solvency and liquidity. Cash flow statement. A cash flow statement is a summary of a business's cash inflows and outflows over a period of time. The cash flow statement should report cash flows during the period classified by operating, investing and financing activities. An enterprise should report cash flows from operating activities using either the direct method, whereby major classes of gross cash receipts and gross cash payments are disclosed, or the indirect method, whereby net profit or loss is adjusted for the effects of transactions of a non-cash nature, any deferrals or accruals of past or future operating cash receipts or payments, and items of income or expense associated with investing or financing cash flows.